Trying to find the next high-growth stocks for the next 20 years is as challenging as it gets. But in this video, we ask the most advanced artificial intelligence model, GPT-4, to do just that. An intelligence with no emotion, no bias, working with quantitative data only. We also look at the performance of a portfolio selected by ChatGPT 20 years ago, thereby offering merit to the potential future performance. Before we get into the detail, can I ask you to consider hitting the like button or perhaps subscribing if you do find value? It really helps the channel. The first thing we needed to do was to educate ChatGPT for the type of stocks we're looking for. For example, I asked for a list of the most notable high-growth stocks from the last 20 years, and this is the response. ChatGPT gave the 20 top-performing stocks ranked by their approximate growth percentages. Most of the popular names were included, as we would have expected, including Apple, Amazon, Netflix, Tesla, Google, and so on. We put these names into our backtest software to look at the equity curve and overall portfolio performance. Clearly, this first portfolio was created with hindsight, and the returns should look spectacular. But remember, this is just the first step in priming ChatGPT for the type of stock we're looking for in the future. We can see that a $100,000 account split into 5% against each stock would have turned into over $19 million during the 20-year backtest. The annual and monthly performance can be seen here for those who want to pause the video. What I also thought interesting for those who have watched my previous video on the 10 and 20-week EMA crossover is that the result could have remained solid by applying the indicator. For example, if the S&P 500 saw the 10 EMA cross below the 20 EMA, we would have exited all positions until we saw the cross back up. This would have resulted in an improved drawdown of 24% in comparison to the 58% from buy and hold, yet still growing $100,000 into over $10 million. Anyway, let's get back to the purpose of the video. We continued to probe ChatGPT into the reasons as to why these companies did so well over the last 20 years, and here was the response. They had a strong market position in a growing industry, a history of revenue and earnings growth, a scalable business model, a strong balance sheet, manageable debt, and a capable, visionary management team. With these factors in mind, we proceeded to ask ChatGPT which stocks would have been chosen 20 years ago based on these characteristics, and without any hindsight bias. The stocks that would have been chosen 20 years ago were provided. 4 of the stocks chosen made it into the previous list of best performing over the following 20 years, but let's look at how the overall portfolio performed. We can see that without any prior knowledge of future growth, ChatGPT selected a portfolio of 20 stocks which returned almost 5,000%, with a maximum drawdown of 52%. A breakdown of the results per stock can be seen here, showing Apple making up most gains with a $5,000 position size turning into over $3.5 million. Not bad at all. What if we again added the 10 and 20 EMA crossover to the backtest? Well, we still get a solid return far in excess of the S&P index, but we also get a lower drawdown, almost 20% less than the 20-year buy and hold. In fact, if we break down the performance, we can see that the 2008 crash was avoided entirely. The question is, can ChatGPT pick the next Apple, the next Amazon, or even the next Google out of a portfolio of 20 stocks for the future? Well, we asked that question too. First, let's recap. ChatGPT analysed the key factors of the best performing stocks of the past, put the same factors onto a portfolio of stocks that would have been selected 20 years ago, whilst again showing solid performances. We now ask for the next best growth stocks for the future, and this is what we got. The recommendations for the future again included some of the past outperformers. Interestingly, however, Apple was excluded. Keen to know why that was, I asked the question, and the response had some key takeaways. In particular, other companies may have been chosen due to better growth potential, an emerging sector, or a rapidly evolving market. It was also noted that Apple's capitalization and maturity may have played a role regarding its growth potential. I also wanted further confirmation as to why the 20 stocks were chosen above all others available, in no more than 100 words. Growth potential, innovation, industries with strong prospects, competitiveness, adaptability, and commitment to research and development summarize the reasoning. I continued further analysis and questioning, expecting some form of oversight. Portfolio diversification was an obvious query. I found that 75% of the stocks selected were from the technology sector, and I wanted to understand the reasoning. Chat's response showed solid rationale. Sector growth, innovation, and scalability amongst the primary reasons, also pointing out its own artificial intelligence advancements. Let's dig deeper. One of the quick methods I like to use when analyzing a portfolio of stocks is the bubble map, provided by the platform Stockopedia. My preferred measure is momentum and quality factors. Quality stocks showing momentum have been shown to outperform in the long term, whereas junk stocks without momentum tend to underperform. Clearly, ChatGPT has selected stocks mostly with favorable quality and momentum factors, apart from Crisp Therapeutics, only just staying out of the junk zone. We can see more information when we add the stocks into a portfolio on Stockopedia. Sorted by market capitalization, we get numerous ranking factors. The most obvious concern would be the low value ranks, suggesting the companies are expensive. This, however, is common when looking for high-growth stocks, where expensive often gets more expensive. One of my favorite metrics is the Piotrowski score, which broadly looks at fundamental quality and momentum, and it seems again that most are favorable other than Crisp Therapeutics. So what can we take from the video? Well, I'm sure we're just scratching the surface in regards to the power of AI, but we can see that by simply asking ChatGPT a series of questions, it can very quickly provide the answers, making investment analysis that bit easier. And who knows, perhaps this portfolio will perform just as well over the next 20 years. As always, thanks for watching, and don't forget to check out the links below.